Good evening, all. It's Sunday night. This is Shay Horowitz, ShogunTrading.com. This is our weekly free newsletter. Something happened this weekend that hasn't happened before in this format anyway. And it is absolutely shaking the market. The Feds have taken over Fannie Mae and Freddie Mac. Basically, they're trying to shore up our financial markets. They're trying to stabilize the housing market and so on. And frankly, what I think they're doing is really they're fixing their own mistakes. But that's my opinion. That doesn't really matter. Anyway, this should really bring confidence to financials. It should really bring confidence to the housing market and so on. And it is quite substantial. So S&P 500 has been down for the last few days. Thursday I had a really big down day. On Friday it gapped down and actually started rolling down quite quickly. And then all of a sudden, there's a 5-minute chart. You can see around 11, something happened, and all of a sudden the market goes up. And we were wondering, why is the market going up? Why is the market going up? And then after the close is when you basically find out that the Feds took over Fannie and Freddie. This goes to show you a couple things. First of all, that people know about the news before the news actually comes out, and that's why the market was going up. Somebody knew something. Second, it shows you how technical analysis really works. Technical analysis, basically, we follow the chart, we follow the trend. We assume that somebody out there knows better than we do, and if they know better than we do, and they're acting, and they're buying, and they're buying, they're buying, they're buying, then we need to follow the trend, and we don't argue with it. And if you're short, you close your positions. If you're long, you hang on to your positions because the market is going up. This also goes to show you that you really have to obey your stops. If your stops tell you, listen, your trade is wrong, then your trade is wrong. You don't hang on to it hoping that the market is wrong and you're right. You're never right. The market is always right. Looking at the futures tonight, the futures are trading overnight. Right now, the way I'm looking at it, the NASDAQ 100 is up almost 40 points, and the S&P 500 is up almost 33 points. Let me show you daily chart again. S&P 500. If we look at where it's at right now, where it should open tomorrow, it's going to be about the 1275, somewhere around here, which means that this move just got canceled out. This huge move down got canceled out overnight, over the weekend, really. NASDAQ 100, NDX, it shows right now we are going to open around the 1810 or so. Of course, that's never accurate, but it's pretty close. But you can see that this whole breakdown of support, the last couple of days, are being canceled out again. This is very curious, and of course it destroys our chart because it's going to create such a large confusion, such a large gap in our charts that all of a sudden it's almost a blank slate again. Now, theoretically, and of course this is just theory, and it's something that's worked for us in the past, is whenever the market is in a trend and the Fed step in to intervene in anything, or there's some kind of news that intervenes with the market, the market reacts to it, it jars the market has to digest it, and then the market basically continues on in the same direction it was in before. So, in other words, if we gap up tomorrow to around this area, we can see that the market will go up a little bit, possibly, and then come back down and continue the trend down. Basically, how much ammunition do the Feds actually have? How much debt can they actually issue before they actually run out of ammo? And I think that's what, after the realization, after the scare, I think that's what people are going to think about. I am glad to see that the Feds are stepping in. I am glad to see that the market is going to be shored up, or at least some of the mistakes are going to be fixed, which is what I think this is all about. If we look at the S&P 500, here's what I think is going to happen. I think we're going to open up around here. I think we're going to go back up, and then I think we're going to start coming down again. My plan is to get short right over here. This level when the market comes back down. There is, of course, a possibility that after we gap up, we penetrate resistance, the 1300, and start climbing up, which will be very interesting. It will be, I don't know, maybe it changes the fundamentals of the market that much that all of a sudden it will change the trend. I really don't believe that's going to happen, but, who am I to say anything? I'm going to wait for the market itself to tell me which way to go. If the market breaks the 1300, if the S&P 500 breaks the 1300, then yes, we're going to go to the long side because the market is telling us that it wants to go up. If, like I think it's going to happen, and we bounce off the 1300, we come back down, and then we penetrate that 1260 support line again, I say go short, go short heavy, and basically go short on anything that you can. Now, saying all of this is what I think the market is going to do. But I also think we have come to the stage of the market, the stage of the trend at this point, that a lot of things are changing. And when things are changing, then you have different type of sector rotation. And some of the heavy stocks that I'm looking at, some of the housing stocks and the banking stocks and the automakers are stocks that we're actually trading on the long side, and we're doing quite well with them on the long side. And I think there's a lot of room to go on the long side. Let me give you a couple examples. First of all, Discover Financial Services. We took it at 1573. We took it all the way up. It was really nice. Not a humongous move, but it definitely worked. Some of the smaller banks we're trading right now, 1941 all the way up to the $22 level in just a few days. And that's the type of trades that you want to trade on a short-term basis because they work very well to put money in your pocket, and it allows you to propel forward. Of course, when the market gets into a serious trend, trading is going to be so much easier, and you basically just going to have to find the trend, find an entry, and just ride with the market. But we're not quite there yet. I am waiting for that, but we're not quite there yet. But I do see some sectors that are looking very, very good. And this may sound strange coming from a trader. I'm looking at some investments, some large companies that are actually at a bottom, in my opinion, and look great for the long-term investment. Where they're just that cheap and look good for a long-term hold. I do, however, suggest that you evaluate the bounce tomorrow and don't enter prematurely. There's going to be plenty of time to enter. Plenty of time. This is where patience is really going to pay off. You really want to see what the S&P 500 is going to do after the gap up tomorrow. You want to see if they break the 1300 or if they break the 1260 after the gap. And then I'm probably going to look for another confirmation after that just to make sure that the market is really going for the trend that it was going. And then we'll see what happens. I'll give you an example. Right now, we were calling the short side. If you listen to the newsletter last week, and what I was waiting for is for it to do this, and then I was going to enter short quite heavily. But instead of doing that, of course, it's gapping up, and it's over the weekend. This is another case for technical analysis. This is another case for short-term trading. We follow the market, and I usually go into the weekend almost flat, and that's a very, very safe thing. Notice that the Fed is always acting on the weekend lately, which is quite curious. Anyway, play it safe. This could be a huge opportunity right now. It could be a huge opportunity to pick up some of the longer-term trades. Don't get in a hurry. Don't jump the gun. Don't be the first one in. The first one in always gets killed in the market. You always want to be the second or third one in. Anyway, that's all I have for you for tonight. Pay attention to the market, pay attention to the news, and we'll see which way the rabbit goes. Take care, and I'll talk to you next week. Take care.